You ever hear about the people who invested in companies like Uber or Airbnb way before they went public? Well, they were able to do that because they're part of this kind of exclusive club, a world of private investments that's pretty much closed off to most of us. Today, we're going to find the keys to that club.
I mean, you see the headlines, right? Venture capitalists making an absolute fortune on some startup before it even has a stock ticker. So how are they getting into these deals when the rest of us, well, can't?
The answer isn't some secret handshake or a password. It's actually an official designation from the U.S. Securities and Exchange Commission, the SEC. You can think of it like a government-issued key that unlocks a door to a totally different world of investing.
So, how do you get one of these keys? Well, it turns out there isn't just one. In this explainer, we are going to break down the 4 different ways the SEC says you can qualify to open that very door.
Okay, so what does the SEC actually say? Well, officially, an accredited investor is someone who has the financial sophistication and the resources to play in the high-risk sandbox of private investments. And let's be really clear here. The whole point of this rule isn't to reward you. It's to make sure you can afford to lose your entire investment without going totally broke.
So once you open that door, what's behind it? A completely different investment universe. We're talking about venture capital funds that are backing the next tech giant, private equity firms buying whole companies, super complex hedge funds, and even getting direct slices of massive real estate deals. The potential returns, yeah, they can be huge, but so are the risks.
All right, let's get into it. Let's look at the first key. This is the classic path, the one most people have heard about, and it's all about your net worth. And the magic number is $1 million. To pass this first test, your net worth needs to be over $1 million. But like with most things, it's not quite that simple.
Here's where we gotta read the fine print. That $1 million net worth can be just yours, or you can calculate it jointly with your spouse. But here's the big catch, and this is the one that trips a lot of people up. You have to exclude the value of your primary home. So all that equity you've built up in the house you live in, for this test, it doesn't count. Okay, so maybe you don't have $1 million in assets just lying around. Don't worry, there's a second key. This one isn't about how much you have, it's about how much you consistently earn. For this path, the first number you need to remember is $200,000. That's the annual income you need to be making if you're filing as an individual. So, just to be clear, as an individual, you need to earn over $200,000 a year. If you're married and you're filing your taxes jointly, that combined income threshold gets bumped up to $300,000. And you guessed it, there's some important fine print here too. This isn't about having one really great year at work. You need to have cleared that income level for the last 2 years in a row. And this is important. You need to have a reasonable expectation that you're going to do it again this year. The SEC is really looking for consistency. Okay, on to our third key. This one is a more recent addition. And honestly, I think it's fascinating because it has absolutely nothing to do with how much money you have. It's all about what you know. You see, back in 2020, the SEC updated the rules. They kind of realized that having a big bank account isn't the only measure of financial sophistication. It figured that certain professionals, just by virtue of their jobs and the tough exams they've passed, are sophisticated enough to understand these kinds of risks. So if you're a financial professional, like a broker or an investment advisor, and you hold a Series 7, a Series 65, or a Series 82 license, and it's in good standing, you automatically qualify. Your income, your net worth, it doesn't matter. This was a really huge change that opened the door for a lot of younger folks in the finance industry. And that brings us to our fourth and final key. Now, this one isn't for people, but for entities. We're talking about things like corporations, trusts, and family offices.
For most of these organizations, there's a pretty high bar to clear. The key number to know here is $5 million in total assets.
So, how does an entity actually qualify? Well, there are 2 main ways. First, if it has over $5 million in assets, so long as it wasn't just, created yesterday to buy the investment. Or there's a second way. An entity of any size can qualify, as long as every single one of its owners is already an accredited investor themselves. So, with all these different paths, you might be wondering, just how many people actually qualify? Well, the numbers are pretty stark. According to FINRA, only about 13% of all households in the United States meet the criteria. That means 87% of the country is on the outside of that locked door, looking in. Okay, so we've covered the 4 keys.
But before we wrap up, we really need to talk about the most important part, what having these keys actually means. It's really tempting to think of this status as some kind of trophy, but the SEC, well, they see it as something very different. This quote really gets to the heart of it. Being accredited doesn't make a risky startup magically safer. It's basically the government saying, look, we assume you're smart enough to evaluate the risks and you're wealthy enough to lose everything you invest without it totally destroying your life. Let me put it another way. Having the key to the stadium doesn't mean you know how to play the game, right? You're being given access to a professional level arena, but whether you win or lose, that's completely on you. It's up to you to do the homework.
So if there is one single thing you take away from all of this, let it be this. Accredited investor isn't a badge of honor. It's a warning label. The government isn't saying you're a great investor. They're just saying you can afford to be a bad one.
So there you have it, the 4 keys to the kingdom of private investments: net worth, income, professional licenses, and entity status. They can open the door to some pretty incredible opportunities. But the real question isn't whether you can open the door, it's whether you're prepared for what's on the other side. And that, well, that's a question only you can answer.